Let's say you finally decide it's time to start learning how to invest. It's a smart move. You can learn from books and online resources. This knowledge will help you grow your money for the future. You open YouTube, type in how to make money trading, and suddenly you're hit with 3 completely different worlds. First, the stock market world, then the crypto world, and finally, the Forex world.
Stocks are the safest way to build wealth. Crypto is the future of money.
Forex traders make thousands per day from their laptop. And now you're sitting there thinking, okay, which one am I? Stocks, crypto, Forex, they all promise opportunity, but are you actually supposed to learn? They all have people claiming massive profits. But here's the problem. Most beginners don't just choose one. They try to learn all 3 at the same time, which usually leads to confusion, frustration, and sometimes losing money. So in this video, we're to answer a simple but important question. If you're starting from zero, what should you learn first? Stocks, crypto, or Forex? My name is Jeannie, and more importantly, why? Because stocks have lower risk and are easier to learn. Jack. And I spend way too much time thinking about how beginners should start learning about investing. If you're someone who wants to get into investing, but feels overwhelmed by stocks, crypto, and Forex, make sure to hit the subscribe button and give this video a thumbs up if this helps you out. Alright, let's start with a simple truth most people don't like hearing. Most beginner investors start with the wrong question. Which market makes the most money? But the smarter question is, which market has the highest market capitalization? Market capitalization is the total value of a company's shares. Market helps beginners learn the right financial habits, because investing isn't just about making money. It's about building skills, discipline, and understanding. And some markets are much better teachers than others. So let's break these down one by one. Starting with stocks. When you buy a stock, you're purchasing a small piece of a real company. Companies like Apple, Microsoft, Amazon, when those businesses grow and become more profitable, the value of the stock tends to increase. Historically, the S&P 500, which represents the 500 largest companies in the US, has returned roughly 10% annually on average over the long term. Now, of course, markets fluctuate. Some years are negative, some years are incredible. But over decades, stocks have proven to be of the most reliable ways to build wealth.
Here's what most people don't realize. Many millionaires aren't day traders. They're long-term investors.
They consistently invest in productive companies for years, sometimes decades. And the power of compounding does the rest. Now, let's look at crypto. Crypto is very different. Instead of owning part of a company, you're owning a digital asset. Some cryptocurrencies are used as payment systems. Others power decentralized applications. And some, honestly, exist mostly because of internet hype. Crypto can produce extraordinary gains. For example, Bitcoin was worth around $1 in 2011 and has traded above $60,000 at various points. That's one of the most dramatic asset increases in financial. But here's the other side of that story. Crypto can also experience massive crashes. Bitcoin has dropped 70% or more multiple times in its history, which means crypto is extremely volatile. That volatility can create opportunities, but it can also destroy and experience investors who don't understand risk. Now, let's talk about Forex. Forex is the market where currencies are traded.
Traders buy and sell currencies like dollar, euro, and Japanese yen. It's actually the largest financial market in the world.
The Forex market is the largest in the world, with over $7 trillion traded daily, according to the Bank for International Settlements. But here's what most beginners don't realize. Forex trading often involves leverage, and leverage magnifies both gains and losses. For example, a trader might control $10,000 worth of currency with only $500 of their own money. Sounds exciting, right? But if the trade moves against them, losses happen just as quickly. This is why studies from multiple brokers show that 70 to 80% of retail Forex traders lose money, not because the market is impossible, but because the risk is extremely high for beginners.
So now we have 3 options: stocks, crypto, Forex, and they all have potential.
But the question remains, which one should beginners learn first? Here's what most people don't realize. The best market to start with is the one that teaches long-term thinking. Because the biggest mistake beginners make is treating investing like gambling. They chase quick wins. They jump between strategies.
Quick win! New strategy!
They follow hype instead of fundamentals. And that's where stocks have a huge advantage. Stocks naturally encourage long-term investing behavior. When you buy shares of a company, you're participating in its growth. You're thinking about business models, earnings, and long-term value. That mindset builds strong financial habits. Now you might be thinking, okay, Jack, but people make huge money in crypto and Forex. And that's true. Some people do. But here's the key difference. The key difference. Those markets require much higher skill levels and emotional discipline. They move faster. They're more volatile. And mistakes can be extremely expensive. For beginners, that environment can be overwhelming. Learning investing through stocks is like learning to drive in a normal car. You learn the basics. You build confidence. You understand how the system works. Jumping straight into leveraged Forex trading is like learning to drive in a Formula One car. Technically, it's possible, but the risk of crashing is much higher. This is where it gets really interesting. Once you understand long-term investing through stocks, moving into other markets becomes much easier. You already understand risk management. You understand market cycles. You understand the psychology of investing. Those skills transfer everywhere. Let's look at a simple example with this balance scale. Imagine someone invests $500 per month into a diversified stock index fund. With an average 8% annual return, after 10 years they'd have roughly $90,000. That's not overnight success, but it's real financial momentum. And momentum is what creates long-term wealth. Meanwhile, someone chasing quick profits across crypto and Forex might experience huge wins, but also huge losses. Without a foundation, those markets often become expensive lessons, which is why many professional investors recommend a simple progression. First, build a foundation with education. Then, diversify and analyze. First, learn long-term investing in stocks. Then explore crypto as a small, higher-risk asset. And only approach Forex trading once you